Wall Street has been turned upside down this week after the value of GameStop shares that had made big bets on the fall suddenly shot up astronomically. Over the past few months, Reddit users on a group thread rallied to drive up the value of the video game retailer, making it one of the hottest stocks on the market. CBS News' Manuel Bojorquez explains.
Wall Street titans may have met their match with a bet on GameStop.
Like I'm I guess, blue collar investor, right? So I scrap all the time, but now when you get something like this, it's one of those all in type things, right?
Individual investors, many fueled by posts on the website Reddit, decided to buy GameStop stock, inflating the price nearly 800% over the past week. The movement gained steam when SpaceX CEO Elon Musk shared it online. Some investors said they gained tens of thousands of dollars. One said it would help pay for medical treatments, all while the big firms had bet the stock would fail.
So just tipping the balance of power, at least a little bit, is what's getting people so riled up about what's going on.
That seems to be the case, yeah. That there are a lot of folks who are saying, you know what, this is a way for us to seize a bit of power. The emotions on Wall Street have ranged from disbelief to fear to a little bit of anger.
The White House said officials are monitoring the GameStop phenomenon as Reddit investors appear to set their sights on other struggling stocks like AMC and even Blockbuster, though experts caution it's still a risky game for anybody involved. Manuel Bojorquez, CBS News, Miami.
Okay, so here to break down exactly what happened and what this all means is CBS News Money Watch senior reporter Stephen Gandel. Thank you so much for joining us, Stephen. So I know that, half the audience is going to be angry that they didn't get in on this action. The other half of the audience is going to ask, what is a stock meme and squeeze and all this sort of stuff. So let's move it away from Wall Street and bring it to Sesame Street. Very basic. Tell us what happened yesterday.
Well, it's something that's been building for a while. It's a perfect storm. A couple of years ago, GameStop has been troubled. It hasn't made money in a while. It closed 1,000 stores recently. And so much of Wall Street has just assumed that this company is going to shrink and go away. And so that's the way they've been betting. But at the same time, a bunch of individual investors have said, wait a second, the stock that was at $4 is worth a lot more than that. It's not going away. And they started rallying around it. And they found each other on this Reddit board, and they started talking about buy, 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 buy. And at the same time, with Wall Street selling sell, 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 there was just a very limited number of shares. And as they bought, these individual investors, it drove the price up. And the Wall Streeters who had these bets, they're called selling the stock short, they borrow stock they don't have. They have to then quickly snap up the stock as quickly as they can to stop the losses. And you have the people on Reddit buying, you have the Wall Streeters scrambling to cut their losses, buying up the stock, and that's created, oh my God, a rocket ship. And that's their symbol online, the Reddit people, rocket ships. The stock has just taken off, right? What was $4 is now, as of the end of yesterday, $350.
So people understand, or they may understand, that when an analyst shorted the stock, essentially sort of bet on the stock losing money, and you explained it well. They borrow stock, they sell it, and the expectation is they'll be able to buy it once the stock goes down, and then they'll make it a profit because they bought it again when it was worth less. But if it goes in the other direction, then suddenly they're going to owe a lot of money, and that's what we saw. But so that's when you short a stock. But what's a short squeeze? Explain that, because I guess that's what we saw, right?
Yes. So the short squeeze is that when the amount of people shorting the stock gets to the point where pretty much, and this was the case in GameStop, pretty much every share was shorted. And so then there becomes a crazy rush to find stock. You can't find stock. There's so many people trying to get this stock to cut their losses that's what it's a short squeeze, when you can't find the stock. And you had another thing going on, because there was this one very popular Reddit person who I can't say their name on the air, they had made this other bet, that they had made back in mid 2019, that GameStop shares would double actually to 8, because remember it was at 4 by the end of January 2021. So now we're close to where the bet was, and that created, since those shares were so far in the money, it's something called a gamma squeeze, meaning that as it gets closer, the Wall Streeters that they've made a bet with, they have to then cover that bet too. And so that's another thing going on. There's a short squeeze, and then there's this options play on these leaps options that are called a gamma squeeze. So 2 squeezes going on.
Right. Okay, so CBS technology reporter Dan Patterson is joining us. We were going to have him via video, but we had some technical problems. So, Dan, we have you on the phone. So you can explain this other side to it, right? The tech side. Stephen, talked about the fact that a lot of this started on Reddit and on the Discord app. People started talking and organizing. These individual investors, if you watch the Business Channel, they'll call retail investors. They're basically just people like me and you. What was the purpose? Was this an attempt to democratize Wall Street? Was this an attempt to sort of stick it to these big investment firms that were, shorting a beloved gamer company?
Yeah, I think what we're seeing here right now, Anne-Marie, is a symptom of the democratization of the dissemination of information, for better and for worse. A number of people inside these chat rooms, both on Reddit and on Discord, some are wholly involved in financial systems, but others feel pretty disaffected. And this is one way of kind of sticking it to the man. It was just incredibly successful, and it might kind of indicate the power of these platforms to reach scale that impacts things that and financial markets for people who have nothing to do with these chat rooms.
So, Stephen, it was really interesting to watch, and it actually has been building. It was only, I feel like, yesterday that suddenly, people who kind of do this for a living made the connections between what was happening on Reddit and what was happening in the stock market. But they were sort of scratching their heads, wondering why GameStop was rising. And not just GameStop, it's Bed Bath & Beyond. There were a few other stocks as well. But still, isn't it sort of like it's sort of, shocking to anyone who was shorting the stock and had money, but isn't it kind of a drop in the bucket? Could this actually have an impact and upend the way the stock market works?
Well, I think that there are a lot of hedge funds out there who have, this has become a strategy. Just identifying companies that somewhere down the road, and the other thing we have going on is this big technology shift. But the question is how fast. So I think a bunch of hedge funds are sitting on bets and saying, well, retailers are eventually going out of business. And so I can just place this short on. And in a way, they have been making free money from the stock market, just sitting on saying, well, as long as some of these companies, Blockbuster disappears. Another stock they're looking at is BlackBerry, which is, not what it used to be. So as long as these companies eventually disappear, I'm going to make money. And there's this other group, this group that they weren't counting on, of individuals who are saying, no, wait a second, there's still value here. It's not free money. So I think that will upend a little bit the stock market. But I think you're right that the stock market and the economy, are trillions of dollars. The U.S. economy is $20 trillion. We're talking about a lot, $20 billion. It means something to average people. But in terms of the size of the stock market and the size of the economy, it's not much. People are talking about this is going to erase inequality. It's not going to do that.
Dan, of course, as a result, people have started talking about whether there needs to be laws or this sort of stuff needs to be, if the government needs to step in and take a look at this. But I guess, if you try to regulate this behavior, then you're essentially regulating individual investors who, should be able to do whatever they want with their money if they want to buy a stock or not. Do you see the possibility of, or I don't even know if there's any sort of leeway for laws or anything to sort of manage this kind of behavior?
I think that this is yet another symptom of the internet and technology outpacing regulation. And I suspect that we are just going to live in this world for quite a while because technology, and not just technology, but the communities that gather around technology and ideas that are facilitated by tech will just evolve at a hyper-rapid pace. Our government is designed to be inefficient, and so regulation will always lag tech.
So can I jump in there? The only thing I will say is that the assumption is that this is average individual investors, right? I mean, Reddit is all anonymous.
Right.
So if this is average individual investors, then yes, I agree. There's not a lot regulators can do. But if this is another hedge fund playing in this Reddit board, pretending to be an individual investor, who maybe is using bots to amplify what he wants or she wants, then that is market manipulation. You can't misrepresent who you are, and that could be where regulators go.
So, Stephen, I actually think that's very interesting because I didn't really consider it. What I did notice, and I have noticed for a while now, is the reaction when I looked at some of the business channels and the people who do this for a living was, what about the people that get hurt out there? What about the guy who's, reading Reddit and invests his life savings and he doesn't realize that, this is sort of a game that people are playing. But I also remember hearing that when apps like Robinhood started to become very popular. Then you heard pushback. Well, these are people who don't understand how complex this is, and they could lose their shirts. And it struck me as a little bit insincere that suddenly there was a concern for sort of the little guy and how they were investing. But I'll ask you, Stephen, I mean, is there a risk that people could get hurt? Is that risk so concerning that there should be limits on how easily we can jump in and out of the stock market when you're just a regular person like me?
I think the people almost 100% are going to get hurt here. I mean, the stock is already falling a little bit. The people who think they're going to make a lot of money or have planned or in their heads, when the stock starts to fall, they're going to sell as fast as they can, and it's going to go back probably, maybe back down, not back down to 4 immediately, but GameStop shares and BlackBerry, it hasn't changed the dynamics of the companies or the economics of the companies. These are still struggling companies. So I think it's absolutely there people are going to lose money. I do think that you can wrestle with the question of whether that's okay or not. I mean, people are allowed to risk their money. So I think, and I do think there are some implications for the stock market. If the stock market looks risky, I think people are going to shy away from it or look rigged, and that hurts the ability for companies to raise money. So I definitely think there are implications, but there's not an easy fix.
Stephen, Dan, thank you. I tried to get on Reddit and see what was going on. I was a little too late to that party, though. But thank you so much, guys, for explaining this to all of us.